Dean Kim is now joining us. He's head of global research product at William O'Neill. Dean, good to have you with us here. Thanks very much. You know, just about at the all-time highs, what's the sense? Take it out with a flourish and head significantly higher, or halt here around somewhere?
Yeah, I mean, it's good to see both S&P and NASDAQ clearing all moving averages and may test year-to-date highs established in July. But the market is a bit overbought as we when we look at the RSI indicator, and we may see a bit of a pullback. What we don't want to see is a gap down in overnight trading that we have seen many times in the past few months. So an orderly pullback would be more constructive. And should we see the market retreat from the current overbought conditions? Right now, pretty much all sectors are recovering from October lows, with only healthcare, staples, and utilities still below their 200-day moving averages. But so far, so good. I'm just a little bit concerned about the overbought condition that we're seeing at the current moment.
Are you concerned about the overbought condition even in the Indian markets? I mean, it's been an 11% rally so far this year, but in November alone, we've seen about a 6% move. Do you think now the Nifty could sort of head into a consolidation phase, and what's the outlook for the next couple of months?
Yeah, I think if we see a bit of a pullback in the Indian market, that's completely natural, I would think. But right now, when I look at the index, the next support is there's a rising 10-day moving average. I think it's about 1% below. So that should act as pretty good support. And when you look at all of the other macro factors, such as oil price, being lower than a couple of months ago, as well as US dollar, that's coming down. Those two factors are great for Indian market. So I don't expect any kind of negative shock for the market. But if we do see a gradual sort of consolidation, that's completely natural.
Dean, hi, good morning. We've discussed financials in the past, and you've had a sort of favorable view on them. Now, earlier this week, we had a big day where the bank Nifty finally started moving and all these big blue chip banks were up and about. What do you see ahead? Do you see some sort of a bigger catch-up move here, or is it too early to say?
No, actually, we're pretty favorable on banks. We've seen banks globally rallying, banks in Europe, even in Brazil. And so, what that speaks to is now that inflation is starting to be sort of under control, we'll probably see, rates coming down. And in that situation, that's generally great for banks. Because that speaks to sort of reflation of the economies. And when we look 6 months down the road, that should be a favorable tailwind for the banks.
Okay. So that's on banks, right? But if we do see the Indian market rally continue, Dean, where do you think the leaders will emerge from X of banks? Are you looking at IT stocks pick up? Are you seeing Reliance come back in a big way? Because that seems to be the narrative now.
Yeah, actually, when I looked at all of the stocks that are setting up, it is broadening, which is great to see. There's a lot of ideas in cap equipment, in consumer cyclicals, consumer names, as well as financials. Now in technology, I'm noticing a lot of smaller companies like Coforge, Persistent Systems, Scient. Those are all, in my view, actionable. So setup is quite favorable. So it's great to see sort of broadening of the market. So I think that's a positive indicator.
All right, Dean, we'll leave it there. Thank you very much for your time. It's a pleasure, as always, having you with us here on CNBC-TV18. We'll take a